Hello and welcome to Wall Street Wisdom. If you're serious about building wealth, navigating the stock market, and making smart investment decisions, you're in the right place. Today, we're diving into a major question that's on every investor's mind. The stock market is breaking records, but should you buy now, or is a pullback coming? The S&P 500 just hit an all-time high. Tech stocks are soaring, and AI-driven companies are leading the charge. But with interest rate uncertainty, inflation, and recession fears still in play, is this rally built to last, or are we about to see a correction? By the end of this video, you'll know why the stock market is surging right now, what history tells us about all-time highs, the biggest risks investors are facing, whether now is the right time to buy or if you should wait. So grab a seat, stay focused, and let's break it all down. First, let's talk about why the stock market is at record highs. A few months ago, investors were worried about a recession. But fast forward to today, and the market is booming. So what changed? Interest rate optimism. Investors believe the Federal Reserve will cut rates in 2025, making borrowing cheaper and boosting corporate profits. AI and tech boom. AI is fueling massive growth in companies like Microsoft, NVIDIA, and Google. Stronger than expected earnings. Companies are reporting better than expected profits, which is pushing stocks higher. FOMO. Fear of missing out. Retail and institutional investors are jumping in, pushing prices up even further. Sounds great, right? But let's not get ahead of ourselves. Now let's talk about the biggest risks in the market right now. Even though stocks are hitting record highs, that doesn't mean they'll keep going up forever. Here's what could cause a pullback. The Federal Reserve. If inflation remains high, rate cuts could be delayed, which could shake investor confidence. Overvalued stocks. Many big tech stocks are trading at sky-high valuations. If earnings disappoint, we could see a sell-off. Economic slowdown. Some indicators suggest a slowdown is coming. If GDP growth weakens or job numbers disappoint, stocks could react negatively. Geopolitical risks. Ongoing tensions with China, Europe, and the Middle East could create unexpected volatility. Now, does this mean a crash is coming? Not necessarily. But it does mean that investors should stay cautious and have a strategy. So, what should you do? Buy now or wait? Let's break it down based on your investment strategy. If you're a long-term investor, buying high-quality stocks at record highs isn't necessarily a bad thing. The market tends to go up over time, and trying to time a crash is nearly impossible. If you believe in a company's long-term growth, averaging in over time is a smart move. If you're a short-term trader, be careful. Stocks can remain overbought for months. Eventually, pullbacks happen. If you're looking for short-term gains, waiting for a dip might be a better play. If you're holding cash and waiting for a correction, make a plan. No one knows exactly when the market will pull back. Instead of waiting for the perfect moment, consider buying in small portions to take advantage of dips while still having exposure to gains. So what's the verdict? The market is strong right now, but risks are still there. If you're in this for the long haul, staying invested in high-quality stocks is the smart play. If you're looking for short-term opportunities, patience might be key. What do you think? Are you buying stocks at all-time highs, or are you waiting for a pullback? Drop your thoughts in the comments. And if you enjoyed this breakdown, subscribe to Wall Street Wisdom for weekly investing insights. Hit the like button, turn on notifications, and I'll see you in the next one.